How do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome you to today's session where we're going to present what we think is a real aid in trying to understand the gas market. For those of you who've been following natural gas and who hasn't, since it's been weaponized due to the NATO-Russo war, it's been a complicated piece of gymnastics to compare the two prices, because the U.S. gas contract is charged in is listed in dollars per million British thermal units. Itself not exactly a handy, useful rule of thumb, but it's sold in dollars per million British thermal units, whereas the European gas contract is sold in euros per megawatt hour. Handy? Confusing? You bet. And what we've done through the magic of technology in this chart, ladies and gentlemen, is to harmonize them. We've converted both contracts to US dollars and million British thermal units. And so this allows an effective comparison of the two prices. And we see that it is 8 times the price. US natural gas is selling for $6.86 a million BTUs, and the equivalent European TTF contract, that's called, that's the contract that delivers in Rotterdam and is the European benchmark for natural gas, is $43 per million BTUs. That's nearly 8 times the difference. So we simply pose a very simple question. Here are these two charts, adjusted for harmonized. Look at the gap between them. Do you think one is going to rise to meet the other? We do. And so does the market. Here is the average volume. This is the volume on per day. This is the average of the volume. You see it's skyrocketing. It goes up from 1709 to 2706. Let's calculate that differential. 17.09 to what do we say? 2610. 2610. That is a difference in volume of 52%. 52% between the volume. So it's up, and so this is driving this chart up. There's a lot of momentum for upward movement in the natural gas price. And that's not only a technical indicator, ladies and gentlemen, that's based on one of the truest fundamentals of world energy supply today, and that is the weaponization of natural gas, methane, by the Russians in their war against NATO. So we expect these not only to converge, but to both of them turn quite higher in the very near future as the European winter gets cold and casualties due to exposure and lack of heating fuel start to kick in. It's going to get ugly. We think this is going to go up. So this is a harmonized chart in a comparable base quote currency and a comparable y-axis unit of millions of BTUs, comparing the European gas contract and the U.S. contract. And what we see, by the way, aside from harmonizing them, is that they're nearly entirely correlated. They're correlated probably, I didn't run the correlation analysis, but just eyeballing it, it's pretty close to 1. When one goes up, the other goes up. So that's going to be good enough now for us as well. And so that's going to do it for today, ladies and gentlemen. That's our take on gas. Wow. Wow. That's what it's like here in the dealing room, ladies and gentlemen. It's a lively place. It's a lively place today. Gas is on the move. So I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.